Nobody's going to give you those terms as of yet. So what can we do to sweeten the deal? And so I said, well, why don't we give them a mortgage
Mhm.
at a great rate, maybe
Mhm.
even 0%. We'll see what happens.
This episode of the Under the Table podcast is brought to you by Shrubs.me.
They say AI is taking everyone's jobs, and honestly, no one knows whose is safe. But here's the thing, when you own your audience, your content, and your brand, you don't wait for someone else to save you. You build your own future. Shrubs puts everything you create in one beautiful hub: more reach, more fans, more income. Shrubs.me, your future, your rules. And when you get there, I'll be right there with you, helping you thrive and grow.
I said 5 minutes, but what I meant was 10.
What I meant was tomorrow would have been much
Things,
better.
things happened in between.
Things happened in between the
Yeah.
getting in the car and getting home.
I was at the dealership and then I had to get home, but I had to wait. It was busy. And then it was like one thing after the next delayed me to get home. And then once I got home, it was like all I need to do is go on the computer and log
Right.
in. But on the way, there was all these little obstacles, you know? I'm dodging bullets and jumping over streetcars, you know?
So not only my wife generally, like when she's on the way to go do something,
Yeah.
does like 80 things along the way. So it's like I'll be there in 5 minutes really means like I have no idea anymore because there's so many things for her to do along the way now that I may never even see her again if she's trying, you know?
But I get things done. It does get done. And I'm very on time. I'm a punctual person, so I don't ever feel like I'm not on time.
That's
Today I
good.
knew I had some leeway. But I
You had
got
a little
some I
leeway.
got some stuff. I got some stuff,
You got
Daryl.
some stuff?
Yeah, anytime we deal with the luxury segment, you get
Mm,
people who are not who they say they are.
they're different.
They're not who they say they are. Like one time I
What
had a
does that
guy,
mean?
well, one time I had a guy who wanted to see some properties and he thought he was very wealthy and he was somebody who was very important. And I
Mhm.
did meet with him and he knew some stuff in Forest Hill. Like he knew the people, even the agent would go to show the house, he knew them from the Four Seasons health club. Like I was like, "Oh, this guy's legit for sure." But it
Mhm.
turned out he suffered from a mental illness where he thought he had more money than he really did, after I asked
Oh,
him some pretty pertinent questions.
yeah.
And then I've had other people who have called me or like, asked me online to go and show them properties or something like that. And then maybe you check them out, maybe you meet with them, whatever, and you're like, okay, like this person's not who they say they are. But
Mhm.
recently I had an offer, big property, 8 digits. I'm thinking this is a great buyer,
8 digits. Okay, hold
right?
on.
So I'm saying to
Oh,
myself, I'm going,
before the decimal?
to the agent, right? So I'm saying to the agent, like, hey, have you vetted this person? And this person, he said, like, I've known her for years. I know her through this. Da, da. So I said, okay, he's vetted. I trust that agent to have done his job. Well, then she ends up calling me directly. And so then I got to meet with her and I got to ask her questions. And let's just say nothing gets by old TK here, Daryl. All
Oh,
right.
nothing. Never.
No, no. If you got significant funds, first of all, when you look people up online, you're going to see something.
You gonna see something?
Nobody who's got a lot of money can hide themselves from online. Nobody who's got significant wealth can stay hidden for forever. Okay?
I disagree, but go ahead with your thesis.
Okay. But that's one part of it. Then there was all these other little things that happened during the time. And they're small things. I don't want to get into them, but they're just small little inconsistencies to the story and
Yeah.
little gestures and little things that
Like,
people with a
uh,
lot of money don't do.
where's your Lambo? Why you have a Volvo today?
That kind of
Right?
stuff, right?
Yeah.
Yeah, that kind of
What
stuff, right?
happened to the Lambo?
Not specifically, but those type of things. And so
Hmm.
I sniffed it out. And then I'm on the phone with lawyers because now lawyers are involved because they're like, well, I'm getting told that I'm getting forwarded these funds and I'm talking to the agents. Now there's multiple agents.
Oh
And I'm
shit.
like,
So hold on a
guys,
sec. This is a
yeah,
deal that's supposed to close and we
no, 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 no. This
oh,
is just a
oh, oh.
deal that's supposed to be negotiated
Why oh, okay. So why so many calls from so many people?
because it's all part of the ruse.
It's a
It's
ruse.
all
Is
part
it?
of the ruse. And I don't know what the end game is,
Is it a
but
ruse or is it a
we're
ruse?
a ruse,
A
whatever.
ruse? I don't know. I'm asking.
the
You
game.
said something different.
It's all part of the shtick, you know?
It's a shtick. Got
It's a
it.
shtick.
It's
And
a shtick.
so like I put a stop to it, you know, and I just told everybody who's involved and I said, guys, if this was a real scenario, all these things would not be happening right now. And everyone's like, well, you know, maybe because now the lawyer who's calling me, he's like, well, she said she's going to use my wife as the agent.
Okay.
And like you're talking about hundreds of thousands of dollars in commission. So now, of course,
Mhm.
he's got some invested interest. He's like, well, maybe we should hear her out. I'm like, buddy, listen, you guys want to send me an offer? I'm in. All day. We're ready, but we're not gonna wait around anymore for this. This is all just some big fantasy island here,
Hmm.
you know. So this is the stuff. Like $800,000 house, you're not gonna see the people like this. You know, if I'm gonna go and come up with a whole story, I don't want to go and look at condos in Liberty Village. I'm gonna be like, hey, well, where's the most expensive properties for sale? Why don't I go and start touring those houses?
So, but
And we'll
why
come up
do
with a
this?
story.
What's the point of the shtick? What's the
Well,
end game?
total theory on mine. Total theory on mine. It may be a dating, uh, what do they call that? Catfish.
What do you mean? A
Like,
catfish?
I'm a multi-billionaire,
Yeah.
right? I
Okay.
want to date you, Daryl.
Okay.
Why don't we go look at houses? Do you have a real estate agent?
Oh, I
Because I'm
see.
looking for $20 million houses. Do you know somebody?
Oh, that's
Do you
not
know any real estate
catfish.
agents in Toronto? What's that
Okay.
called?
I don't know what that's called. I think it's imposter, but like,
Sure.
or con man, I think.
Yeah. But
Catfish is
Daryl,
different.
Daryl, do you mind if I stay at your house for a little bit? Because
Yeah.
when I do get this deal together, like, you know, I'm thinking about maybe I'll give you the house. Maybe I could put it in, I can, yeah, you know what? I don't have anybody to leave it to.
I
Why don't you,
wonder,
I put you in my will and then you can be the owner
right.
of the house afterwards. Would
But
that be okay with you?
I wonder why he always wears the same suit, right? I always wondered why his shirts are always
Yeah.
a little wrinkly.
Yeah. Listen, my financial controller told me that this month they've just put a huge investment into our investments in Brazil,
Yeah.
right?
I'm,
And
I'm
so I'm a little
short
bit
on
light on
cash.
Canadian currency. So I'm just wondering if you can put, you know, maybe $1,000 on a Visa gift card for me.
Yeah.
And you know, I'll make sure I give you back like a Rolex. Is a Rolex good for you? Do you like Rolex?
I think it makes sense. I think that's
Yeah. That's
reasonable.
my theory. I don't know. I'm crazy.
So
I think
you
too
think
much.
this guy's setting up showings with you and having lawyers involved and everything just so he can show somebody on a date that he can buy
I don't
this
know
house?
motives. I don't know motives, but all I know is
An
that
intriguing
I've dealt with
theory.
people with money and I've dealt
Yeah.
with people who can afford certain price points and I've met with them and I've talked to them and I see their profiles and it's very easy to track. Also, their agents usually have got a close connection with them. Think about it. You got lots of money, you probably got a relative who's an agent and or a very close friend, and that person will say, because this is usually how these luxury agents mingle, is just like, yeah, we do dinner with them every second month and we're up at their chalet and we
Yeah.
see them up at their ski hill and all, you know,
Yeah.
they have all these stories that they can tell you because they're close with these people,
Yeah.
right?
Yeah.
Because that's what a luxury agent does, right? Is they get into the country clubs and they start hanging around with those people in the social settings, and then all of a sudden, oh, you're
Absolutely.
thinking about buying? Oh, wow. And that's how they get
Absolutely.
their business, which is fine. That's their shtick. That's their MO.
It's interesting because I mean, at certain points in my career, I personally have had to act bigger than I was for sure to
Hmm.
try and get a deal because who the hell's going to give me a deal, right?
Yeah.
So I had to like, uh I don't know, just act like, bigger than I was. I would have to go in there and just be like, I'm the shit. And if they would do a background check on me 20 years ago, it'd be like, the fuck is this guy, right? And
Yeah.
and I'm sure I must have given off some who the fuck is this guy vibes going into some meetings,
You
right?
pulled out your HGTV pilot episode, and they were like, "Oh, maybe he's for real."
Well, who knows what they could have pulled out, but like
Right?
sometimes you can't look. Everybody has to start somewhere, and if you're starting to work on big deals and your dad isn't a billionaire, I mean, what are you going to do? You got to go in there knowing what you know, doing your thing, and hoping that your lack of experience doesn't bite you in the ass somewhere, right?
Yeah.
If you go into these things going, okay, I was kind of
My
thinking
first
maybe
time.
you could help me out and we could buy your building, and maybe a VTB or something. Maybe
I
you
know
can
that's
help me
not
out with,
ideal for you. You know what?
right?
Forget I asked.
Great. I'm out of here. I gotta
I'm
go.
doing For speaking of VTBs, I'm doing VTBs again.
You're doing
I'm doing
VTBs again?
VTBs. Absolutely. We're trying to put the deals together. I got 3 offers on this property in the last week. I can't get the guy the price he wants. I'm struggling to make sense of it to him. I got at least people interested in biting. I got a tenant who doesn't want to leave. We got to pay her to go. I got a house that needs a lot of work. It's a struggle. And so he's like, I want my terms. And I'm like, great. Well, like nobody's going to give you those terms as of yet. So what can we do to sweeten the deal? And so I said, well, why don't we give them a mortgage
Mhm,
at a great rate, maybe
mhm.
even 0%. We'll see what happens.
Maybe even at
If the
0%,
if the
zero
terms
fees.
if you
Come
have a
on
big enough down payment, if
down.
you have a big enough down payment, then
Mm.
it would be less risk. So then it's like, well, what's the big deal, right?
So what's
But
the
I mean,
VTB? A first?
yeah, only first mortgage, right?
Whoa.
Because the place needs to be renovated. So most guys, what they'll do is they'll fix it up and then go to the bank and refinance a year later, and
Holy
it'll
Jesus.
refinance for a pretty penny.
Oh God, Jesus. This is amazing. This is what we talked about
Those are the
like at the
deals.
beginning of the crash. The VTBs were going to come into fashion. They
Yeah,
did come into fashion for a little while. They became a tool, but
yeah.
now
They became a tool to close.
to close,
Just
sure.
to close the deal, not like the initial
Not as
negotiations. It was
not
just like, how do we
oh
save this deal?
save the deal. Okay,
Yeah,
got it.
yeah,
Then it disappeared. I think it felt like nobody was talking about. I mean, at least with houses and stuff, nobody was talking about VTBs. And then now you're saying it's back in fashion, or this is extraordinarily segregated to you and your band of merry men.
It's just it's people who are baby boomers. I'm actually working on another one as well too. Baby boomer deals where they've got no mortgage or very little mortgage, and so it's like they're open to it. They understand it. They feel comfortable with it. They're
Why don't
kind of
they
just
just
like,
lower their
yeah,
fucking price, dummies?
listen, if you broke down how much they would earn from the interest, or lack of interest because of the rate that they're going to give,
People
and
are so
versus like
dumb.
just lowering the price, like it makes sense to lower the price.
Yeah,
It's
check.
totally like they're
So
just like
dumb.
stubborn that they don't want to like lose or something like that. I'm like, all right, well, like let's hold a mortgage then,
It's so
like
dumb. Listen,
yeah,
next door to us on Bayview, okay?
yeah,
I was working on the neighbor at the same time as the deal that I closed on. And we got great terms from one neighbor, and the other one basically told us, go fuck yourself. I'm not giving you those terms. It doesn't work for me. Meanwhile, I closed the deal right beside him, and now he's looking for less money than he could have made and been closed already. Right?
yeah,
Like he lost himself over $600,000 being stubborn, right? Because now he's
yeah,
asking 600 less than he would have already been closed at 2 months ago,
yeah,
which is crazy, right? And so
yeah.
now it's like now he's willing to sell
Is he
it for
listed?
less. He's listed. He's
Mm,
willing to sell for less, but the lawyers fucking it up still, right? Because they're looking for a firm deal.
yeah.
It's like, what the hell? You got a development site, you're selling it as a development site, but you don't want to give anybody any due diligence time. Meanwhile, you should be closed already for more than $500,000 more, which is
Yeah,
insane. Like,
yeah.
where's the thinking? And the
Nothing.
guy's lawyer fucked it up the last time too, right? Which is
Yeah.
crazy that lawyers can fuck things up so bad. And man, if we weren't on the air, I could tell you a story about lawyers making a mess of things. Holy Jesus. It's interesting because our guest is not here yet, TK. I don't know what's going on. Maybe he's not going to show up.
Most of the lawyers that I deal with, like obviously lawyers are smart, they're
Some are
educated,
great.
they have experience, like they've done a lot of great things. Some of them are
Yeah.
deal makers, they're investors, they're out there buying properties themselves. But like the average real estate lawyer, like anytime I need to get into like nitty-gritty stuff as far as how to negotiate an extension, how to be able to negotiate the VTB, like new term, like
Who
they're always
even
coming to
needs them
me.
anymore?
They're coming to me for the advice. Like they're
Chat
just like, okay, what do you
GPT.
think we should do? And I'm just like, all right, well, let's structure it this way and let's make sure they do this. And they're like, oh, that's a great idea. And I'm no rocket scientist.
The answers ask Chat GPT in those cases now,
Maybe to write the clause. Yeah, yeah.
and the strategy and everything now.
There's a lot of things wrong with ChatGPT, but anyways, I agree with you. There's plenty that you get from it as a layman.
This episode of the Under the Table podcast is brought to you by Shrubs.me.
They say AI is taking everyone's jobs, and honestly, no one knows whose is safe. But here's the thing, when you own your audience, your content, and your brand, you don't wait for someone else to save you. You build your own future. Shrubs puts everything you create in one beautiful hub. More reach, more fans, more income. Shrubs.me, your future, your rules. And when you get there, I'll be right there with you, helping you thrive and grow.
Right? Like you can come across as if you
No,
were,
layman's no good. You got to know your shit. This is the trick. You can't,
yeah,
it's a tool. It's an enhancer, right? So if you're an
yeah,
idiot, it's going to enhance your idiocy, right?
yeah,
You're going to just rely on it if you're an idiot. But if you know your shit and you put stuff into it and you can refine it because you know your shit,
sure,
then this
agreed.
thing is like, holy Jesus.
Absolutely,
And
absolutely.
eliminates all those questions to lawyers for like little things that you already know the answer to. You just need
Yeah,
like a lawyer to bounce it off
15
of or
minute
something.
call,
Yeah.
$85. Come
1,200
on.
bucks. Who you dealing with? 85 bucks.
For
Can you
15 minutes, that would be $340 an hour.
I
So
just
that's what I
got a
was
bill
saying.
for 22 grand for I think even half of working on half of the contract, like my side of the contract.
Yeah.
It's insane what these guys charge. And I'll bet you there's like 0.15 of an hour costs like 382 bucks or
And how much did
something.
the lawyer do, and how much did like the
I
clerk?
didn't even look. I opened it up.
Yeah.
I saw the button, the number, and I was like, fuck, I don't even want to see what period of time this is for because the
Yeah.
negotiation's not even over. And generally they're like billing for the previous month.
Yeah.
Right. But
Yeah.
anyways, like it's not only the lawyers, it's like the mix that's going on, right? It's like the lawyers plus the people involved could work out fine, could
Yeah.
explode, could drag on forever, right? If both sides like are just like really, just pushing, still in, they're
Yeah.
pushing, everybody knows there's still room and blah, 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 blah. But then like who knows what happens when it takes so long? People
I
get
know.
annoyed,
I
right?
had a closing yesterday. Same thing. I don't even know if it closed yet. I'm still like this morning. I'm texting everybody, going like, "What happened? No one updates me. I'm the least important person to everybody
Sure.
until they need
Until
me,
there's
right?"
a problem.
Yeah. And so I'm like trying to figure out this morning, like, did this deal close yesterday or not? And the guy had some financing issues. I'm not really sure. There was all sorts of sloppy work being done on both sides of the legal team. Both of them just didn't really understand it. I referred her my lawyer, but she like didn't like her. There was some sort of tiff, so she went with her lawyer, and that guy obviously is not as good as the person that I was trying to refer them to, who's going to be actually
Mhm.
on top of things and answer my calls and answer my questions and, let me sort of navigate things a little bit. But, long story short is then there was a disagreement because when there's an extension, imagine if you got an extension letter and you said, okay, I want 2 weeks extension. And then I said, no problem, dear. I'll give you 2 weeks extension. It's 5 grand.
Mhm.
And then the day before closing, I send you a statement of adjustment and say, hey, remember that extension? Well, it's 8 grand. And you're like, well, what happened? And then I'm like, well, there was things that we didn't calculate properly that came up. In
Yeah.
order for that extension that we gave you, those are our actual costs that we incurred, right? And so, how would you feel,
It's just annoying.
right?
It's
Like,
annoying.
how would you feel? You'd say, well, I agreed to the extension based on the number you gave me, and now you're telling me it's more. They're
Sure.
legitimate expenses, but how do I know? Why didn't you just give me the right number in the beginning?
It's not how lawyers work. It's just not how it works. It's
Exactly.
it's so crazy. I mean, it's just another thing that doesn't work the way it should, for God's sakes. Oh,
Yeah.
there he is. He has decided to join us, TK. We have a wonderful guest today. We haven't had him on for a long time.
What's the time? What's the time frame?
What's the time frame? What's the time
Yeah.
frame? What does that
2
mean?
years, like the last
Oh,
time that we had him.
uh, hmm. I would say probably more. Let's get him
Okay.
on here. Jeremiah Shamus from Colliers, super agent.
Sorry to interrupt the podcast, guys, but I do want to ask for your support. If you please could subscribe to the channel, it would mean a lot to us. It helps us in the algorithm. It helps us grow, helps get the channel out to more people. So if you could please leave a like, hit the subscribe button, and just try to enjoy the audio of this episode, because the visuals are going to get quite shit when the guest starts sharing their screen. It's we've never dealt with that before, so.
Super agent of the stars.
be.
Super
Could be.
agent of the stars. That's an old picture of him. He doesn't look like that anymore. Oh, look at him. All relaxed for the Under the Table podcast. We're in a hat. I love it.
I know. I had to match you guys.
Oh
said-
my God.
He said I could do my hair, I could wear this hat I got here.
I don't
So,
think I've ever seen him
True.
not wearing a suit.
That's true.
it's
Yeah.
hanging.
Or
It's
a
hanging.
bite.
Shamelessly, I have some ownership in Well Juice. So go to your local Starbucks or Costco and buy a juice.
Oh, look at
nice,
this.
nice play.
Well
done,
sir.
Well done.
Got it
I
in
love it.
quick. I love it.
Yeah.
Yeah.
What is that?
I,
What is
I
it?
know that if Jeremiah comes back on the show, I know that things right now in the Twitterverse have calmed down for Darryl. Daryl's not under fire by anybody. Darryl right now, everyone's just kind of like, yeah, that Frankfort guy's not so bad because we're getting all these guests to come back who haven't been on for a little while.
We're getting
right?
good guests now.
Yeah.
I don't know if that's the truth, but anyways, yeah,
It's a little risky with him sometimes.
Sometimes, how do you think I feel?
it's a little risky. Every
all good.
week, TK has to take a leap of faith here.
Oh my goodness.
It's all good. It's all welcome back. What's going on out there, Jeremiah? What are you doing out there?
Yeah, it's pretty rough out there. It's what I would call a complete turn off of the market. And, the correction started really, call it 2021 Q3. So we've really been into this thing for 4 years now.
2021 Q3.
You're talking about land. You're talking about development
Mostly,
sites?
like almost everything is
Okay.
down. Like what you would call a correction is a decrease in the dollar volume in the market.
Mhm.
And that's really, the biggest issue is like, there's just been no volume in the transactions in the market. So, I mean, I can actually show you a few things here. Can I share my screen? I can probably share my screen.
Yeah, you're gonna piss off.
This
the
will be a
editor,
first.
But hold on
This will be a
one second.
first. He's taking over the show, Darryl. He's sharing his screen.
One moment, please. We're
Are
gonna have
things
to-
transacting? Because Daryl's been sharing with me lately that you've had a couple big deals, that you've had some successes lately. That
Yeah, there has been some transactions we've done. I mean, we like to make ourselves a bit of an anomaly. We call it. We are kind of digging around the gutters to find deals done. But
Oh, great.
yeah, but I mean, like, we can talk about all the asset classes, but let's look at all these. Like, this is office. Office is actually, ironically, in a recovery. It is one of the markets where people are actually interested in doing. People want to transact in office because it was so beat down for so long. And the only reason you see a lot of transactions here in 2022.
Hold on, you're not sharing your screen. We can't see what you're sharing.
Oh, you can't. Okay, I tried. Didn't work.
Maybe because we're recording. One
Let's try this.
participant can share at a time. There we go.
Does that work?
That worked.
Okay, perfect. So we can actually show you some graphs here.
Nothing is show. Oh, there we go. Look at this. Now it's a
wow,
real
we
show
got a presentation.
here.
Sit back. I'm
Holy
gonna get my
shit.
tea.
I
All right.
Editor's gonna freak.
know. Yeah. So
I know where he lives. It's okay.
Yeah, I mean, listen, it's if you want to go through a little state of the market, we talk about, okay, what's going on. I mean, the population growth is over. We're cresting that, kind of coming back down to what I would say would be a mean, somewhere around 1.5 to 2% immigration in the market. That's really what's happening. Tariffs are causing significant change to a lot of markets around Ontario, mostly Windsor, KW, Brantford, Guelph, Hamilton, some, Belleville, some, Thunder Bay, some. Sault Ste. Marie's not on here, but it's also one. And then, let's look at the different asset classes. So office, really most of the best years in office were the exact lead up to the pandemic. And the reason for that is because we had one of the lowest downtown office vacancy rates in North America.
Mhm.
And I don't know if you knew this, but the downtown West, where Allied has Allied REIT, which is a public company, has a lot of their stock. The vacancy was effectively 0%.
Yeah, it's crazy.
2018, 2019, you could not find space in the downtown West. It's almost impossible. And so pandemic hits, the entire market stops for office. Then people start to realize, wait a second, we don't need this office. So the entire market pulls back. In Toronto, the only reason 2022 was a real high point here, $3.8 billion that transacted, because 1.1 billion of that was RBC Tower, which was sold to the founder of Zara, which Colliers, we did that transaction actually. And so his family office bought that asset, and that asset was a big part of the transactions in the market or capital market.
Was it a deal? Did they get a deal on it?
It's hard to say if it was like a quote deal. I mean, like it can pull up the exact stats.
They bought an iconic building. I mean, either way, I'm sure they're pretty happy with it, right?
Yeah, I mean, listen, it was one of the biggest transactions of the entire um,
Continent.
market. And it's 1.1, almost 1.2 billion. You can round up to 1.2 billion, but uh, it was about I think it was about a billion US dollars. But effectively, this is like one of the biggest deals that's ever happened. It's over 1 million square feet. At the most iconic address, Bay in Wellington, Bay in Front Street, spans an entire block, and you've got those gold windows. I mean, it's iconic building. It's older, but it's one of the best ones. So that's what happened in the office market there. Otherwise, we would have been down closer to here for transaction. And then in 2023, there's a few larger transactions that got done for not distressed sellers, but people who had to sell. So the market basically from 2020 transacted here because owners had to transact, because none of the banks wanted to do any refinancing of their assets. They actually did what's called a cash-in refi, where you literally have to refinance and put money back into the mortgage because they won't do the same amount. And then you see 2024, and then you see 2025, 363 million. If we annualize that to the end of the year, we're only going to end up about, just under 7 or 8 million, or 800 million rather, with number of transactions, a really good indicator of where the market is. We end up, somewhere around, let's call it, because we're August now. So 140 transactions, which will be kind of closer to, let's call it 2008, 2010. So number of transactions lower in either. But the point is, and the takeaway here is that office is actually beginning to recover because it's been beat down for so long. And now the values are actually reasonable.
Is there inventory? Is there inventory?
Yeah, there's inventory. And so you can buy an office building in Toronto now at, 8-9 caps. And, your debt, your cost of debt to call it the cap rate is very similar to an unlevered return. And, effectively your spread there can be pretty significant, which, over your debt constant, there's I would say close to, last one we did was close to 250 basis points, so 2.5% roughly. And so it's pretty good, right? And when you look at multifamily, when you look at industrial, and you look at development land, there's a lot of issues there. Everyone's kind of looking and saying, you know what, office is pretty, it's pretty attractive right now, because there's really not a lot of markets that are going to be worse than they were, right? And so the occupancy has come back. There's been a number of decisions to bring people back into the office. The Ontario government.
Is that adding to the demand, or is that just filling up spaces that are already leased, that are empty?
Filling up spaces that are already leased, really, but it's occupancy. So the occupancy is now at about, I think it was, the last I looked was 84% pre-pandemic. So it's never, we're never going to get to these years, right? The 2019 years. Well, not, I wouldn't say never, but in the near term. And now you look at the downtown isn't as attractive as the suburban, where it used to be flipped. So suburban vacancy in Toronto is 14%, or rather downtown vacancy is 14%. Suburban vacancy is 11.4%. So, back to a much more balanced market. Pre-pandemic, we were 4.6% downtown. We were in the sixes to sevens, I believe, in the suburban market. I don't remember exactly because we don't really transact suburban office. We do more downtown. And if you look around the country, everything downtown is much higher than the suburbs. So, arguably Vancouver is the best market because there's very little inventory there. A few large transactions just happened, still significantly lower cap rates than Toronto. But the last large transaction that happened in Toronto was actually a 438 university, which was sold to a user. So it was the Ontario government. But, if we look at a few transactions here, what are the office transactions that are happening is 1.6 million square foot of density to build residential here, and the building's 231 square feet. But if you could buy a building and your land price is $50 a foot at Yonge and Sheppard, and you're buying it at 7.5% cap rate, you're pretty happy. So these are the type of deals getting done. This one was sold to a user, so all the cap rate is low. The user actually can use 100,000 square foot building. Largest transaction this year, which goes to show you very small, 32 million, pretty small. But it's 8 acres. They can really use this building. It's out in Mississauga. This was a distressed deal. This was the lowest price office building that sold for a major, kind of in a major core. This is in, downtown Scarborough.
That was under receivership, right?
Yeah, it was a receivership play. Colliers sold that as well. And it was, a fairly large parcel of land, 1.85 acres. So they basically bought it thinking, okay, we've got some income and we can improve this significantly. There's a lot of upside in the rents and the renting out of the building. The buyer specifically really likes Scarborough. They've got a lot of assets there. They're a good client of ours. We've sold buildings for them, and they're one of the smartest buyers, I think, in Scarborough. So that's kind of what's happening in office. If we want to talk about retail,
well, hold on a sec. In the office space, go back to that chart, because it looks like, people are talking about shortage in homes and shortage in condos coming down the pipe because of stuff not getting built. I'm guessing there's no more applications for offices downtown. And then, like, just trying to wrap up into this question is, like, in the run up, was a lot of that office space new offices, or was it like 10 floors in a 80-story tower downtown with like mixed use retail office res?
No, there was a lot of new office built. I show you just right behind me, but I don't know if you can see, it's a bit bright, but that right there is CIBC Square that's being built behind me. So, like, you see CIBC Square, and the second phase of CIBC Square were brand new AAA office that has been built. The south part of the property is completely leased. The second phase is mostly leased. And you effectively about, I think, 30% less left there. But there's a lot of new office that's been built. Hines is sitting on a lot of mass timber product in Sterling, the Junction, South Junction, and then also on the waterfront. So there are definitely some office buildings sitting, but most of the product that was done in this buildup was a lot of new office coming online. Some of these new AAA buildings and the shadow space from them. And then a few buildings were taken down to be residential development. And then there's TD Square that was, or rather TD teachers and TD put up at university. In the South Core, there was 3 new buildings that were built there as well. Actually 4 if you count where RBC's new head office is. So a lot of new office was brought online, and it was gobbled up quite readily. And Allied REIT almost built a few new buildings too on Front Street. They ended up selling that to a Japanese foreign fund, which included 141 Front, which is the largest data center downtown, and some office development there. So like there's, a lot of this stuff really transacting, and a lot of new space that came online. So, and that was all absorbed up until 2019. It was the pandemic that really changed everything. So still a very strong market comparatively to the US. We don't have a lot to worry about for office in Toronto.
Are people leaving now, or are they coming? Are there new companies coming looking for office space?
Yeah, there's still net new absorption.
Really?
Yeah, some fairly large office buildings got built, or rather, tenants got placed. And, for example, another new building in the South Core down closer to the east side of the South Core, LCBO took a new building space there. And then Canada Goose, they left their existing space up, what is the street in North York, East York, or not East York, York. And they came down into a brand new purpose-built office building as well.
Or weren't they in like the Caledonia area there?
Yeah. So I forget the exact address they were at, but regardless, they came down here, and George Brown did that as well. George Brown bought an office building from another developer down there too. So Daniel's built some office condo. So there's quite a bit that came in, and the South Core has really kind of revolutionized the way that the financial core has worked. And of course, Maple Leaf Square with CI Investments is there, and a few other large tenants. But yeah, net, we're still getting new tenancies. The market was beat down for really 5 years, and that's why we are starting to see a recovery in office. It's taking some time.
I'm seeing a lot of talk now about the going back to work, going back to the office, not just the province, not just other companies, but the trend is there, And so what happens is the job market gets competitive again. And all of a sudden now that's not an option where you can't say, well, they're offering me work from home,
Yeah,
because they're not. And so now everyone else says, we don't need to offer work from home because
yeah,
they're not. And next thing you know, that'll be a trend. So I see a return to office work for the majority of businesses. That's just the reality of how businesses run smoothly
exactly.
and efficiently, right?
So another darling in our current horrible market is retail, especially grocery anchored retail and neighborhood strip centers, and strip malls. These are, this is a market where it's really hard to find this stuff because there really hasn't been a lot built. It's mostly been resi that's been built over the past year. So again, you see 2021 retail being the darling of the market. Almost 700 transactions, 3.5 billion. It's dropped off a cliff like everything else, but we are still seeing a lot of, significant demand for this. And we can give you an example. This is something we sold at a 5.1 cap. We had over 100 groups interested. And, it's just a basic neighborhood strip center. And we've got another grocery anchored one for sale right now. It's the same thing, significant amount of buyers in the market. Here's another one we sold. This one was on Yonge Street, close to Lawrence. It's a good land play with income here. And again, sub 5 cap, more common in the sub $10 million range, but still significant demand for this type of product. Here's a larger transaction that's a really good one where Trinity, they have a retail fund. They're buying this type of product, and they believe they can see some growth in this property over the course of the next 5 years. But they bought this really as a stabilized asset. So it's, just sub 6 and large tenants, Food Basics, Tim Hortons, Walmart, something that someone's always going to be around. But again, if you look back at, how much transactions have happened year to date, it's 1.1 billion. We still will end up probably somewhere around this 2020, 2015 market. So not exactly that bad comparative to the rest of the market. Number of transactions which is more indicative of, are they large deals that are happening or small deals happening? That'll end up somewhere around 300, which is maybe not as good as 2015, but it's really just more that there's larger deals happening. So it's not the end of the world. It's some of the larger strip centers are being sold, grocery anchors. There's still a lot of liquidity in that market. So something that the demand curve has kind of settled to. So one of the bright spots in the market, retail plazas.
I like what you said earlier about the like cap rates and stuff like that you're starting to see. Like they're starting to become more realistic now. Are you seeing that in retail as well? Like you're starting to say, like before people were saying, hey, there's a land play here, so I'm gonna do a 3.5 cap, no big deal because in the future. But now they're like, no, I'm not banking on my land play to make this work for me. I need it to
Yeah,
be.
there's less of that, which is really nice because the income buyers, as we call them, IPP, so income um, uh, producing properties, these buyers can actually go back to being normal. They can be the ones that are underwriting it regularly.
Don't have to worry about a developer coming in and blowing them out of the water, right?
Exactly. Now, with that said, there still is attraction to locations. And I mean, this is a good example of that. This is a good
Yeah.
example of that.
I was going to say most of these
in Markham, it's a site that is not exactly huge, but close to Yonge and Lawrence.
the
But
corner.
this is indicative of more of a market deal, market cap rate, still a bit aggressive, but potentially some extra land here. But we're never going to get away from the development land market because everyone still knows eventually at some point there will be demand in the residential market, and there will be a way to take some of these markets and deal with the fact that they are going to be able to develop this, right? So the demand will be there at some point.
Yeah, I look at all those and I just see the future development play with like a cover until
Yeah.
The Fincham one though, I don't know. Like that's farther. That's further out.
yeah, but that's a
It's a big
great
site.
play. Look at that
Yeah.
site and it's
Yeah.
covering itself, and you could probably got room to increase rents, and that thing will be nice.
Yeah, it will be. So industrial, the story here. Like here's a good example of what happened. Like industrial vacancy. So we had a very, very tight market for a very long time. When I was first a research analyst at Colliers in 2009, 2010, we did this big study and we were like, wait a second, rents have been the same for basically 15 years. They need to go up. And vacancy rate is, sub 4%. Canadians in their conservative atmosphere never pushed rates up. And in fact, in 2009, we saw a decrease in dollar volume amount until about 2016 for building sales, for industrial building sales, and then 2017, 2018 for industrial land. So it wasn't really until those years you started to see a pretty aggressive upswing in the price of development land for industrial, and as well as the rental rates for industrial. So, pretty significant from where we saw that growth.
Yeah,
like,
stupid.
Yeah, like it's pretty insane. Like you look
Yeah.
at like 2019, 2018,
Yeah.
you saw basically the single greatest rise in any asset class, more than residential, in industrial. And so in 2022 is the same thing. It was like absolute insanity. And basically the overall thesis, to give you some kind of understanding, is that when you look at industrial rents in some of the major industrial core markets in the US, their rent costs in, say, a New Jersey are like the equivalent to $50 a square foot Canadian.
Wow.
So when you look at your rents in Canada, we're effectively at the high point of the market. They were really about $22 for the most specialized buildings. And now they've kind of settled back 16, 17, 18-ish, kind of depending. That market is still pretty cheap comparatively to some of the other markets around the world. So you had one of the largest industrial landlords in the world bought a $500 million piece of land up here because they're like, listen, Toronto's always going to be good. There's a very controlled stock here. We just know it's a matter of time before it grows. So that market, it really only equaled the residential land market, kind of got up to the 7.6 to $8 billion of transactions. And then eventually it's been softening now, right? So significant softening. Leasing is still strong, but yeah, not nearly what it used to be.
Were they building new in the GTA industrial?
Industrial all
Yeah, the
over.
407's a big hot spot.
Oh, right.
Yeah,
GTA.
Caledon is a pretty significant growth area. There are a few infill sites, large infill sites that are still happening as well. Scarborough has a few, Markham has a few, but most of the growth is centered in Caledon and Hamilton. Slate bought that monster parcel from US Steel, the steel area. They bought 800 acres there, and they're developing all of that. So Hamilton would be a growth market. Hamilton's airport is going to be a growth market because there's no more space for goods and services to flow through Pearson. They've been at peak capacity for their logistics business. So now it's going to Hamilton. Hamilton's growing as a market. And then you have Caledon, and north of Brampton is another part of the big growth in industrial. And there's some issues there as well, obviously, because of tariffs. There's been, significant changes in the auto sector as well as the agricultural sector. So these are things that will definitely be some headwinds for industrial, but you're still going to see what I would call one of the greatest growth areas in the GTA, I think, for asset classes. There's just not a lot of it. It's hard to build, and there's not a lot of land to do this kind of product. And so that market, I think, will always be strong. It's just a matter of kind of balancing out where it was. You had, from really 2017 to 2022, you had this just massive shift in growth and kind of settled down now. So we'll probably end up back at the 5-year, 10-year moving average, which is closer to roughly $3 billion. So, we'll probably get there this year. But, it's hard to say exactly what's happening, and still massive deals happening. This was a large sale leaseback. Crest Point, a large fund, they bought this $253 million. They wrote the lease, 5.1 cap, and $340 a square foot.
Wow. Good deal for them.
Wow.
AAA tenant, really nice building. The tenant wanted to open up some cash, and so they own the asset. They sold it to Crest Point. Crest Point wrote the lease that they'd like to see. So, something is very nice. And then here's an interesting one too. This is a small bay industrial property. This is something that a number of buyers are very aggressive on. They want to see some of these smaller kind of end user business type product. This is one that we see a growth market as well.
Yeah, love it.
Long term, because there's just a lot of people want to own their own real estate. So it's, something where you can kind of rewrite the change of a large industrial building, turn it into small bay, or buy a small bay and open it up to more tenants, modernize the space, increase the roof size. There's a lot of things you can do.
Condo.
Especially it looks like that, and it's not like an old
So this
1970s building.
This is a condo conversion right here. It's done by a small group that really know what they're doing, but they effectively bought this building for $321 a square foot. And they're going to sell it at $550 a square foot. And they probably put about, $80 a square foot into it. So this is your classic condo conversion play, similar to what's happening in the industrial land market, which is kind of what we're going to talk about next. But, you have land where you build and then you sell off the industrial condos. So Forager, which Miles on our team used to be on the private equity side before he came and joined our team again. They will look for land, build a building, sell off the industrial condo. So it's the same playbook as the residential developer. The difference is it's industrial. And so people want to buy small industrial. They want to own it, and they want to be able to, control their own destiny when it comes to their own businesses. So that's another good example of what these markets are. And here's another one. BD, they like to do the same thing. They bought this at $2.8 million an acre. Is done in March. BD is a large developer from Vancouver. Carteria, a good client of ours. Same thing. bought this up in the north part of Scarborough, east northeast part of Scarborough, and they were able to buy this and develop um, a modern industrial building and actually build out and put a tenant in that. And they'll eventually sell that because it's one of their funds. But industrial land, same thing. You know, it's kind of followed this the high points in the market. The residential market has really gone down significantly. So industrial development is hard to do right now. There's a big bid and ask between the landlords and from where, you know, called the owners of industrial land, where buyers want to be. So that market will take some time to come back. And it really follows a similar timeline. As I mentioned before, what happened in the great financial crisis, the only asset class that was really hit was industrial, and especially industrial land. So you can see here, the market was kind of in a growth mode until 2008, the crash, 2009, a low point, and then it didn't really get anywhere until 2016, 2017 again. And because effectively from 2009 to 2016, the equation to build industrial did not work. You needed a certain rent. And in order to get to that rent, you needed to be able to build your building. And the tenants in the market were unwilling to pay it. So it was a psychology. So I always say this is a really good model for what has happened in the residential market. You can see this exact same scenario playing out. We have a large crash in the residential market. None of the users want to pay what is necessary in order to justify the development of the actual building to make a margin, right? Because the builder's not going to take a big risk on a construction loan to actually build it. So once you actually get to that, then you have this ramp up in this massive ramp up. So I personally think we are in a similar equation for residential. When the equation starts to make sense again, when the pricing has come down, when the costs have come down, and when the user, the person who's actually paying, either renting or buying the condo, the residential, when they're actually able to do that, we're going to have this similar ramp up like we did in industrial. And so you see 2016, you know, up to 2019, obviously the pandemic was weird. And then boom, boom, huge growth years. So it's almost like this kind of slinky effect where, you know, you have people follow the demand goes all the way up, and then we crash and we come back down. That's just how markets work. So, I mean, I think the same thing's going to happen to residential, but we're still probably 4 years into this correction right now. And there's likely probably another 2 to 3, potentially 4 years to go before things balance out again. Who knows? But the point is, this has happened before, and this is will happen again. And I mean, this is Toronto.
What's the market you're the least, favorable on right now? Because every market kind of you have your ideas and they make sense on which one still. Like office, I would have assumed you would have said office is done, don't buy it, stay away. It's never, it's never going to come back. But you make a good point. Where now the cap rate's right. You got
Yeah,
these
listen,
income producing buyers who are saying, I want that type of property.
well,
So
you can get a return, you can get a margin
yeah.
because the values have come down low enough. So we've found the bottom in office.
Yeah.
Industrial is probably the most difficult asset to make sense of today, followed closely by residential. Those are the ones that, it's really hard to make sense of the equation today. You have to buy right. If you can buy right, there is a way to make it work, but these are few and far between. So like
So you posted
And there's
the
a lot
other
of recovery.
day, on Twitter, something about, it's the most you've seen action wise for I guess power of sales. But on the other hand, you also have like big deals about to close
yeah,
simultaneously. And I've been talking lately about some big players, going from very down on things and, bitching about the market like everybody else to all of a sudden, oh, I'm buying land and oh, I just bought something in North York. It was too good to pass up on. And you start seeing, Brookfield unloads on this building and you see, a bunch of apartment buildings transact. So it seems like people are finding ways to make some things make sense now.
yeah, big time. It's some of the smartest buyers in the market are now bullish. And it's because the valuations for residential have come down significantly.
Well,
We
and
can touch on that.
couple that with your other post about construction costs the other day, because I think you mentioned that those are down significantly as well.
Yeah, in some cases, I've heard some builders tell me they're almost down 40% from highs.
Yeah. Yeah.
Wow.
That's massive.
Yeah.
And
Massive and dropping still, because who the hell's building anything soon?
Yeah.
Yep. And people are being let go. The best guys are being put on jobs, and site velocity has increased what I'm told almost 1.5%, I guess.
What does that mean? What is site?
1.5 times.
Is that to shovel in the ground or after the shovel's in the ground?
No, like velocity, like how, yeah, sorry, I'm using these random terms. Like the ability to build faster is now reality, because you have, for instance, a forming contract where they're building all the concrete. They used to be so spread thin because there were so many jobs to do. And forming is very specialized. You don't have a lot of people doing this large companies to do this. Now that it's effectively, it was the first part of the construction cycle to be completed and finished for high rise. So you have, you're building the structure, the concrete. That has now been completed. All of a sudden, these forming companies effectively had no jobs to do. So they had to start laying off people. And we're talking large forming companies would have over 1,000 employees, right? Yeah. So if you have no jobs and you have 1,000 employees, you're starting to sweat, right? So they were dropping their prices significantly. We heard at one point there's $30 a square foot to do forming. Now it's back down to like $12 a square foot is the most aggressive. I'm using the two most aggressive pricing. Obviously, more realistically, there's at the tops like 24, 25, maybe $20 a foot. And it's come down to, 12 to 14 a foot, but, still significant change. And now those builders are, rather these trades are willing to actually get stuff done. They've let go a lot of their, call it weak skilled trades and staff, and they've only kept some of their strongest employees. And so they're now going to sites. Say, I was told about one high-rise site right now. Darryl's screen.
Oh, I don't know what happened there.
You shared your screen, but they're able to pour
editor
almost one floor per week.
There we go. Jesus, sorry.
They're able to pour one floor per week in some of these high-rise buildings now. So
insane, yeah.
Pretty incredible when you
all the things we've been talking about. What about taxes and what about financing? I want to ask you about the MLI Select stuff, because everybody I talk to,
development,
it's like a buzzword. They love to talk about it. Like they know everything about MLI Select, and I ask them specific questions, and they're like, "Well, I don't know. I don't do the underwriting." Even guys who have it approved can't answer certain questions. Like, are you seeing that being a productive tool in some of your clients or some of the guys who are developing in order to be able to actually get sites that wouldn't have been able to be built and started?
Actually, not the case in many situations. I'll give you an example. There's a developer who has a permit-ready site today on Yonge Street. Beautiful site, under 300,000 feet. Really nice kind of bite-size site, but she has about 400 units or so. And because of that, they have to undergo a much more stringent underwriting with MLI Select and it's not Select, but something else. And they effectively have to put almost $75 million of cash into this project in order to build it. That's about triple the amount of equity required for a condo project. So, his response to that was, okay, wait a second. With $75 million, I could do 3 sites. Now I can do 1 site. And the returns are actually much more tight on a rental building, the yield on cost. And so they're deciding not to do anything. And so what they have to do is actually go to a traditional lender, something like, say, National Bank, RBC, TD. And some of the traditional banks are actually now funding purpose-built rental, ground-up rental apartment buildings. And so MLI is not the saving grace in
useless.
Not useless, still a very effective tool in certain cases, but you really got to be
It's a
some.
buzzword. It's such a buzzword right now. Everybody talks about it.
No,
Like
it
it's a
was great. It was so good a year ago, and then they destroyed it. And listen, it's still a good tool for certain projects, but
It's tricky, yeah. The best project or the best function is the most difficult one.
yeah.
Um, of CMHC is the apartment construction loan program, so ACLP. This program, you have to have 20% affordable units in your building, but they give you effectively a 10-year bond. So the cost of construction is significantly lower, and your takeout loan is also lower. So you have 10 years to basically build a building, stabilize it, and hold on to it. And then at the end of the 10 years, you have to take out a loan to kind of restabilize that. And obviously, at that point, you've finished your building, you've grown your rents, you've stabilized it, you have a normal vacancy. This is an excellent tool, but this is very, very tricky to get this financing. The ones that do get it end up being one of the best builders in the market because they can, effectively use this tool in order to actually get buildings built, and as 20% affordable product. So it's really good for the market, but hard to get that done.
Are you a real estate agent and you're looking to make a change anywhere in Ontario? Guess what? We're hiring. Frankly and Associates, #1 team in the GTA for all Remax teams, #1 team for all teams from all companies for number of units sold throughout Toronto. So if you're looking to make a change, best decision I ever made was to join Frankly and Associates. Go to jointeamleo.com and we can set up a call.
Where does that actually work? Like, do you have to have one of these sites that has 3 towers on it already and a bunch of space left over? So when are people using that?
All over the place. I know of 60,000 square foot boutique building similar to what you're developing, Darryl. I
With
know
20% affordable?
Yep. And
What?
I know of a large tower site as well where there's 20% affordable. So we know a number of different types of products. I also know of, small sixplexes and 18 unit apartment buildings that have it as well. So it's kind of been used all over. There's been a few developers even mentioned in this slide today that are using it, and it's something that can be a really effective tool. But the point and the takeaway here is that not all apartment buildings are using CMHC. I know there's people online like Fodge, who's the eternal bear, who think this is the next major crash coming. I don't believe that to be the case because it's not a massive amount of demand for the new product being built today. Actually, most developers, I would say, are actually opting for a traditional financing. It's only a takeout tool for a lot of these builders. And at that point, you have a stabilized building. So your risk is a lot different comparative to, actually doing the construction phase and having to lease out. That's the biggest risk for an apartment building. And
Yeah,
this is a really good graph, actually, because you can see, what happened in the past in the 50s to 60s when there was this big push for apartment buildings. All that product in the 60s and even the 80s and 90s, that made up a lot of the product that we see today, being most of the rental product. It wasn't really until you saw 2011 to 2021 where you saw kind of a little more stabilizing of rental buildings being built around Toronto. And now obviously we're going to have a ramp up because this doesn't include condo. You had about 15 to 30,000, depending on the year, units being built on the condo side now on top of this rental. So that demand is being dealt with by the rental building. And obviously, as Darryl knows, we have an active mandate with Darryl on one of his development land sites to build a rental building. And so this is the thesis in which
Why don't we talk about it?
in which we show, equity groups who are looking to joint venture with Darryl and build this building as to, where's the demand going to come from. We personally believe it is hyper specific to neighborhood. You can look at a rental building in the midst of a lot of condo towers and a lot of other purpose-built rental being built, and this could be a tricky spot. But if you find a location where there is a lot of the components of an excellent, well-rounded neighborhood, where you have strong median income. You have really good amenities. You have access to transit, access to highways and schools and hospitals. I mean, if you can take a location like this and you have effectively no competition for a rental building, you're going to do extremely well. And so that's why,
It
Darryl,
sounds great. Yeah.
There's a lot of
Wow.
glamour,
Are you talking
a lot of
about a specific
a lot
site?
of lights, a lot of lights living in that neighborhood that a lot of
Oh,
people would
wow.
like to have.
yeah,
Yeah.
exactly. So, I mean, like that, but it's true. It's like you can't, people think this is a sales pitch. It's not a sales pitch, not that complicated. It's like if you're in
No.
a great neighborhood where you have basically everything you need and there's a strong contingent of median income, and you're going to add, say, let's call it 50 units to that, and you have no competition for that rental product. I mean, I'm not going to say it's zero risk, but it's something where I would put a dollar all day long.
Yeah.
And how would people contact you, Jeremiah, if they're interested in getting involved with this project? Just,
I'll show my contact info at the end here, but this is interesting. People think, oh, the vacancy rate's really low for purpose-built rental. It's actually quite high because it takes a while for new product to be absorbed. We have vacancy rates upwards of 15% for some of the product being brought online. And so this seems pretty scary, but it's just because it's new buildings being built. So, you can see the amount of units that have been completed. This is completed units and brought online. And then you see the rents they're getting. And then you see, where the average rents have been growing over the years. So, we had a pretty significant bump, obviously, up to 2022, and now we've been trending downwards. So, not really as risky as everyone thinks. This, again, all the Twitter bears love to talk about how we're scared about rents and they're going to keep decreasing,
Crashing rents, right?
crashing rents. I mean, listen, I don't believe that to be the case because people need to live somewhere. And so there will be continued I think erosion of rents in Toronto, but not significantly. I mean, last year we had 4%. This year it'll probably be another 4%, maybe the next year 4%. But after you deal with 2-3 years, you're probably going to deal with the complete opposite after that. And that's just been the way to look at growth in the market. And if you compare it to where rents have been, say in 2018, when they really started to grow, and then we took a bit of a pause in the pandemic, we're going to be back to a fairly normal market. It's it's a pretty good way to look at it. So
I think similar to office, right? Where that older stock is the one that will take the biggest hit. And then the newer stuff that people are looking for more modern conveniences, they're going to be the ones that the big tech firms and the big companies are looking for. Rental residential is the same. Nobody wants to live in a basement apartment or in an old 1970s apartment building, but when you got no choice, that's where you go. But the new stock that will come on, especially the purpose-built rentals, they're going to be laid out right. The amenities are going to be right. The locations are going to be right. So I think those will have less of an impact on those rents. The market will have less of an impact on those rents.
Well,
But
and
you'll see a change in demand for sure as temporary residents decrease, as we've got our market challenges over the next few years. But I don't think that the new purpose-built rentals being built won't be attractive. What's going on with the one at
so I
Yorkdale? Fitzrovia did that deal there, that building there. How are they doing
Yorkdale,
on
I
there?
got a jet soon because I got my team waiting for me. We're doing a team event today. So
go,
I
go,
better
go.
fly through this. But yeah, Fitzrovia building, some beautiful buildings by Yorkdale. But just to kind of touch upon what's happening with apartment buildings, apartment buildings were kind of the darling.
Share your screen, Jeremiah. We can't see it.
Apartment buildings were the darling of the market for a significant amount of time in the pandemic. Let's see here. Let's share this. Okay, there we go. Can you see it?
Yep.
Yep.
Okay, so apartment buildings. What happened? The same thing. Pandemic. They were the hot spot. Again, a bit of a bubble, but still for good reason. A lot of good product. And now we've kind of changed significantly. Apartment buildings are the most sensitive to interest rate moves because the spread between the actual cap rate and the interest rate is the tightest. And so this number price per unit has been skewed a bit. Most apartment buildings in Toronto today are trading around 250 a door. There's some examples of large institutional sales that happened. But yeah, we've seen a significant change there from the market. And it really started Q3, Q4 2021 and really started to gain momentum Q3 2022 when transaction volume was down 80% year over year. And then it just, caught steam in 2023. In 2024, there's a few portfolios that sold that helped keep that up, institutional portfolios. But now we're really, quite down compared to where most of the market is. This is the graph I was talking about just a second ago when I thought I was sharing my screen. But in the 50s to the 70s, you had a significant amount of rental stock that was built in Toronto because of some really good tax incentives to actually get stuff built. That formed the basis for most of our rental stock in Toronto. It happened again in the 80s and 90s. CCA restrictions on vacant buildings. This CCA rate was pretty incredible to actually get buildings built as well. The depreciating the assets. So now, again, we've had quite a few things that have changed, but you can notice after the HST abatement and the capital gains increase, then back down to decrease, we've had a lot of stuff happen. Now 120 PTMSAs have been approved and inclusionary zoning is in effect. Those rental buildings will be excluded from exclusionary zoning, which is essentially 5% affordable, which will help to get more rental built. But again, this doesn't include condo buildings built. So you can see why it's increasing, because a lot of these condo buildings are going to be taking up a lot of that demand.
I thought MERB built a lot more buildings than that. That's not very many.
Well, yeah, but you got to remember that
population was a fraction of the size. Immigration was a fraction. We didn't need any more than that.
There's like 3 buildings.
We probably overbuilt back then too. That's just what happens, right?
Yeah, it's true. But it was more, the MERBs really caused a lot more building outside of Toronto. So this is Toronto specific. So it's a little bit different. But this is the graph I was talking about again when I thought I was sharing my screen. You have a lot of growth in rental rates in Toronto, and you have a decrease in rental rates now. But the total demand has been pretty significant and, like very close to the amount of product that's being built. So that average rent, although has been decreasing a little bit, I do not agree with the Twitter bears as to where it's going, because I think we have a really sticky stock and the entire market is converting to being renters. So just a few things to talk about, some really, fairly standard deal that'll happen today, sub 5 cap, but still well into the 4s with very low rents, large piece of land, 50 to 70 units, 250 to 275 a door is fairly standard transaction. Still good demand for this, but a lot of vendors and the sellers of this product, they still think they're seeing a lot of product going to go back up to those 300, 400 a door, which we don't really think is likely going to happen. So because I got to go quickly, we'll talk about the most fun situation and everyone's favorite. You can probably use this in your YouTube. You got to listen at the end in order to know what's going on in the distressed development land residential market.
We'll use exactly what you just said. Thank you very much.
You're welcome. So what is going on? Yeah, major distress market. If you look at, what has happened in distressed, we haven't even put in 2025 stats yet, but it's up around here. It's climbing significantly. We are in a serious correction for development land market. And what happened is the highest point of the market was 2021, 2022, 2017. These years really kind of echoed where the condo and the residential buyer, single family home buyer was looking. So developers looked at their sales office and they're like, we're selling out condos, we're selling out houses, let's buy land. That's exactly how it happened. As simple as that.
You can see that. Yeah.
And so 2017, and then of course in 2018, that was your mortgage rules stress test came into effect. So we had a bit of carefulness in the market. And to be quite frank, if we had not seen the free money of the pandemic, we probably would have had 2018, 2019, 2020, 2021, 2022. We would have a more balanced market and we would not be where we're at today. But of course, we had all this free money, and then that free money caused significant amount of changes in the market. So we had to really move. And developers who had expensive land debt with no revenue, no way to push it forward, they're defaulting, unfortunately. It's a sad time. You see entire careers completely gone, people who have worked their entire lives to then lose it all. It's sad.
I was
But
going to ask you, have you been in a room with a grown man crying recently?
not crying, but jokingly telling me they're going to go to Niagara Falls and put themselves in a barrel. Go over
Oh,
the side.
fuck. Oh,
Yeah, that bad.
Yeah.
Listen, it is
I can
sad.
imagine. I can imagine some guys like, thank God we got out of Kingston Road. I mean, for my side of things when we did, because God damn it. I'd be over
You'd be in the barrel.
I'd be in the barrel, man.
Yeah,
Exactly.
100%.
So I got to quickly move through this because I have to go. We've got
No
7
problem.
young on our team, but here's a transaction we actually got done.
I was going to
Way to
ask you
go.
about that when you said Cartera before. That was with
Yeah,
Matt, right?
That was you guys? All
27.9
right.
million. Yeah, it's 237,000 square feet. They're actually going to increase that in second submission. It'll get down to around 100 buildable.
Yeah.
This transaction, the vendor was very happy. It was zoned by a developer.
Matt, right? Matt Young. We talked about
Matt
this
Young,
a bunch of times.
Republic, zoned it for the owner, and the owner decided to sell it. He wanted potentially to build it at one point. He changed his mind. And you end up with a really good transaction. Carterra had a perfect building that they can build a rental building here. So for them, they're going to be in and out, build it, rent it, and stabilize it. And then they'll have a nice rental building right on top of Transit Stop, right on Queen West. Really nice, beautiful building, handsome building, one would say.
Handsome.
And we'll end up with a really nice rental stock there in a market where there's not a lot of new rental. Baz's, this is another transaction that got done. There's a retail plaza. They looked at it and thought, you know what, we can really increase the density here. We're going to buy this thing across from the shops at Don Mills. This is a large shopping center for the listeners who aren't in Toronto. And they were able to buy this at, a sub 4 cap. So there was some income on it, but they're actually able to do something there. This is an interesting one. Luxury product built, very high price, but it was.
Oh, is this the Staples? Is this the Staples?
Yes. So this is what was the original? I'm trying to remember the original tenant, but this is a transaction that happened a while ago, and what changed was the actual builder had a partner, and then the partners, effectively one of them wanted to take each other out. So they did a shotgun clause here, and a new investor came in and they bought it from the other investor. So it's really, it's kind of a true market transaction when you think about it, but it took a long time to kind of happen. And so, although it'll look like a non-arms deal, it's still a pretty significant transaction with a vendor. It'll be a rental building, or rather a condo building. And
Darryl likes that price per buildable.
No, but I feel like when they bought it, I remember thinking, fuck, they just bought this thing for like $500 a foot. What the hell's going on here? Like a long time ago. Exactly. I guess they found some more height somewhere along the way. They must be near MTSA now, I guess. Yeah.
Exactly. Yeah. So we can talk slightly about Hamilton. It's one of my favorite markets. This market has had the same kind of change in dollar volume, effectively 81% decrease in dollar volume amount, the same as Toronto. If we look at Toronto, that dollar volume amount is really kind of fallen off the cliffs. We may end up at 90% decrease in dollar volume. From some of the past years, and it's pretty drastic because there's really just not a lot going on. So industrial land, residential land, some of the worst markets right now, but some of the smartest people are starting to buy development land because they can buy it at prices that has not been seen for the past, let's call it 7 years. 7-8 years. So some pretty significant savings, but for the people that are building in really good locations where there is not a lot of competition, you get a much better cost basis, price per door basis, and you get to finish a building when there's not going to be a lot of product being built. So in our opinion, one of the greatest times to find shovel ready, site ready buildings to actually get constructed, because you are taking advantage of a time in the market that just is bad for everyone. So, your cost, like, just call it your cost per door, is going to be significantly lower than anyone else, especially when everyone kind of wakes up and starts to jump on the bandwagon. So that's my state of the market today.
All right.
Hopefully
Well done. What
that
a wonderful
helps.
presentation.
Round of applause.
The first
Audio listeners
presentation.
only. Jeremiah, give them the audio listeners only. Give them where they can find you, because they won't be able to see the link in below.
Yeah, for sure. I mean, I'm on Twitter, Jay Shamus, SHAMESS. You can find me there. You can find me on Instagram. My email is jeremiah.shamus@colliers.com. You can look on collierscanada.com and search Jeremiah. I'm pretty easy to find because there are no Jeremiahs selling development land and buildings in Toronto. So one of the easier ways to do it. So, but yeah, I always appreciate being on the show, giving you guys an update about what's going on. I got a jet because I got my team.
All right, go.
But,
Don't worry.
Thank you
We
for your
appreciate you. We'll
time,
get you
sir.
back on soon.
Yeah,
Yes.
absolutely. So thanks, guys, and we'll talk soon. Always a pleasure.
All right, take it easy.
Sounds good.
Thanks.
Bye.
That's gonna be hell for Aiden, man.
The information that we bring to the people,
Too much.
the market updates.
I feel like that was a very professional episode.
We were the
Very
third podcast he
unlike-
did today. He was putting that on the show on the road.
Well, hopefully he's doing presentations all day for Bayview, for God's sakes. And he's busy with that.
Yeah. But still, you can see these big transactions, and you see like that the money that's being transacted is still at a pretty high volume, even though comparatively to the other previous years, you're going to say, oh, well, it's down, it's down, it's down. Well, those
Big
people who are making
deals.
$20, $30 million purchases, $250 million sale leasebacks, these are big players.
Monster deals.
They're
monster
moving money
players.
around.
They're moving
Yeah.
money around.
Big
It's like
time.
some interesting deals you see there. And so this is kind of the message I've always had. People don't hear it somehow, but like there's deals to be made in every market. Like you just have to kind of know what the
Absolutely.
fuck you're doing, right?
Yeah.
And you have to be smart. You can't base it like on stupid shit.
Yep.
Right? You have to have an edge, maybe. Like, look at these guys knew that they were going to be able to lease back the building at a 5.1 cap, right? For probably
deal.
30 years.
$250 million.
Net. Like they don't have to worry about nothing but just
Yeah.
paying the debt, right? Just pay the
Yeah.
debt, collect the rent, pay the debt, hope those guys don't go bankrupt. That's probably the biggest thing you got to worry about is if that guy goes bankrupt, you kind of
Yeah.
fucked for a while, right? You
Sure,
kind of
but
fucked for a while.
I'm sure they thought about all that.
I'm sure they thought about all
they
that.
took that into consideration.
Absolutely.
But that type of scale, that type of purchasing power is still out there, and those guys aren't reading the comments. They're not looking on Twitter. They're not reading the articles on Better Dwelling. They're saying, hey, and this is the most important thing for me as like individually me. Does the fundamentals make sense? If I'm buying an office building and the office market still has another 10 years, 20 years of recovery, but I'm buying it at an 11 cap, and I factored in the vacancy rate's 14, and I've underwritten it at 20% vacancy, and like everything is making sense for me to get the return on my money that I'm expecting to get as a minimum, right?
Yeah.
It's a good deal.
Well,
You're
it's a
buying
good
buying
deal.
an 11 cap building in downtown Toronto in a great location. That, yeah, sure, maybe there is some downside still left in the market. It's possible.
Possible.
But my debt,
Likely.
my leasing, like all those things that are predictable to a sense, are going to be there in place for me to be able to make money still. So I mean, I'm pretty confident in what Jeremiah was put on. He wasn't bearish on anything. That's why I had to ask him. I said, "Hey, Jeremiah, tell us really what's going on." And
Well,
what
how
I
much
read
worse
there
can
was,
stuff get for
well,
fuck's
I read
sakes?
there that the industrial still has more room to come out, which I believe as well, because it's just crazy that prices could go up so much, and then
Yeah.
the residential land still too.
It's crazy how
There's some
much
bad sites.
industrial is getting built and that there's even demand. Like you go out to Mississauga or Caledon where he's talking about, it's like seas of just the biggest buildings you
Blocks.
ever seen with no
Yeah.
windows. And it's
Yeah.
like, what the fuck? Who's
Fucking robots.
renting this?
There's
Who's
robots in there. There's gonna
what?
be
right?
Who's
What's
in there?
going on?
I
It's
know.
crazy, but yeah, Jeremiah's been around the block a bunch of times. Like he is a
Yep.
get it done
Smart
kind
guy.
of guy. We've
Yep.
had an interesting relationship, me and he, from day one till
Yep.
now. But
Yep.
you know what? He's a get it done kind of guy. I'm a
Yep.
get it done kind of guy, and we get
Yep.
shit done, man.
He tells you he's going to be there. He's on the ball. So, and now
This
he's got the
guy,
site that he's working on for Bayview for you, and you got
yeah.
the right guy doing it.
Well, and it's interesting because they're
Yeah.
not selling it for me, right? They're looking for either a partner or equity. Like
Yeah.
it's not the same thing that they always do, because the same thing they always do is not
What
doing
you
so
need.
good these days. No, but
Sure.
like
Yeah.
who the hell? Like there's not, even though it's starting to ramp up and it's feeling better and there's maybe some big ones.
The price is
There's
not, nobody's
well,
making money
well, and
from their land sales right now. Yeah.
the amount of transactions are not there. What's there is like maybe somebody bought some crazy generational piece of land for a
Yeah.
huge amount of money at a
Yeah.
great price that propped up the volume, right?
Yeah.
But the actual transactions are still, it's still very hard to find something that makes sense to pull the trigger on, right?
Yeah.
But it is still possible. It's just not like before. You could almost just buy anything and you could make money if you were lucky with the timing, right?
Yeah.
Now it's like you really better figure this shit out. Maybe you better be foolproof. And they're all of those deals, they returned enough cash to cover the bills in case you couldn't do the next part of the play, right?
Exactly. Which
People
is
are,
what any logical investment should
should
be made up
always
of.
be, but like
And it
what
was just we
he
diverged.
well, he touched on it, is when you have a development play, now the developer can come in and take
Mhm.
a different cap rate, right?
Mhm.
Increase the price, take a different cap rate because he knows that in a few years he's redeveloping this. But now
Mhm.
you have to just be like, does it make sense today how it is? It will be a bonus whenever the hell I get to do the development, right?
Yeah.
And then that's a very different mindset because it creates a totally different competition in the market. Right now, the developer
Exactly.
can't come
A
in and
healthy,
healthier,
a healthy
better,
competition
all
of
around.
people who have time to talk to their analysts and to be able to look into, every factor to make sure that what they're buying is what it is. Because all the people who he's got right now, not all of them, some of them are just bad luck, but most of them who are going under receivership, who are losing their properties, it was because those fundamentals weren't there. They said, don't worry about it. We're going to sell it in the next five
Yeah.
years. The exit strategy of
Appreciation.
refinancing, it wasn't there. It was like, well, we'll sell it. We'll sell pre-construction. No, you got to be able to carry that property. And if it's got no income, you're going to be up the creek without a paddle. But
Yeah.
he saved Matt there on Queen Street.
Well, I mean,
That he did well for him there at
he
that
did
number.
great for him there. It definitely
He got
freed
him a
up
really
some
good price.
cash, I'm sure. In
He
a
got him a really great price on that deal.
it was, I'm sure, a happy deal for everybody.
Yeah.
Listen, TK, like you alluded to or like you mentioned at the beginning of the show, like we had Foch back on. Now Jeremiah's willing to come back on. It seems my mouth, right, has
Yeah.
not destroyed everything yet. Next week we have Dr. Mike Moffat, who I don't know when he decided that he would join us, but that's a great
Yeah.
guest, right? We had Richard Lyle on a few weeks ago. We got Adrian Rocca coming in a couple of weeks from Fitzrovia.
Yeah.
Like we're
You've crossed
turning.
I think what you did was you crossed the line in the beginning because everyone's like, who's this Darryl guy? Should we really listen to what he's got to say? He's a little offside sometimes. We don't want to attach ourselves. And then now you're legitimate and everyone's like, okay, this guy knows what he's doing. He's got a few ideas you might not agree with, but he knows what he's talking about. And now everyone says, okay, let's, they forgive your politically incorrectness.
That's right.
I've known you longer. That's why I'm still here.
Well, Brian Crombie, who I joined on his show, who's running for mayor of Mississauga and has his own podcast, he's joining us after Adrian Rocca. Like,
I
this
love
is
it. I
getting
love it.
legit. And like, just in time for me to announce that I have to quit the show because it's ruining my goddamn career, TK.
Okay. I got an AI replacement for you that you're training.
That's right.
So yeah, so
You
we're
will
gonna be
now
fine.
be joined by an AI to replace me because
Yeah.
the heat is on, TK, and I
Yeah.
don't want to deal with it anymore.
The day it comes that I'm replaceable by AI, you will replace me. Like the day that you perfect the TK AI bot, it'll just be like, you know what, TK, we recorded the show already this week. You don't have to show up if you don't want to. It's up to you. And I'll be
It's
like,
up
oh,
to you.
really? Thanks, Darryl. Thank you. You saved me this week. I didn't have to show up to record. and you're gonna be like, don't worry, don't worry.
The
Go work hard,
TK,
go make money. I
the,
got
the,
you.
I think what you'll see, TK, is well, a blank screen for a couple of weeks, and then
Yeah.
maybe a professional version. Maybe I'll
Yeah.
slick back. Maybe I'll get a haircut again, TK. Start
Nice.
wearing a suit, put on a tie, and be that boring version. And then,
Okay.
if that doesn't get any traction, then I mean, we are training the AIs. It's a couple grand away for 2 AIs that will probably put on a better show than this, TK.
Will they interrupt as
But,
often? Today
if
I
you-
don't interrupt when Jeremiah talks because
That's right.
he's good, so he just keeps going. So today I was quiet. I was quiet.
You were very quiet today. You did not
Yeah.
interrupt him at all,
Yeah.
which is nice. And
But you?
well, listen, again, it doesn't matter because it's over, TK.
It's over. Show's over, guys. If
we-
you're still listening to the show, it's over now. Apparently, Darryl just told me.
It's over.
Like, comment, and subscribe.
Like, comment, subscribe into the abyss of the Under the Table podcast, TK. Now is the time. Now is the time. If you haven't subbed yet, now is the right time.
What are you waiting for?
What are you
But
waiting
we'll see it. We'll see you next week.
for? Adios, everybody.
This shit is taking 5 years.